Good morning, everyone. Welcome to Admiral Markets. Let me
Microphone here because you're probably not hearing me all too well. Hopefully now you should hear me better. So once again, welcome. Good morning. Thanks for joining us. Again, this week we have 3 webinars of live trading room on Tuesday, Wednesday, Thursday. Today we'll be taking a look at intraday trading. So that's going to be very interesting, I think. We're going to take a look at what's happening in the Forex market in just a second. But as always, we are, first of all, looking at this PowerPoint explaining, for instance, that the material here is for a global audience. Please take into account that it may not be suitable for everyone. To get the corresponding info on charting conditions and other details, take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, trading for exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with the disclaimer and the content mentioned here and on the websites and in the terms and conditions. So we thank you for your attention for this important topic. Good. With that said, we can take a quick look at what we are looking for as a checklist when reviewing the currency pairs. Something you always want to keep in mind is there a trend or is it a range-bound environment? If there is a trend, what is the direction? Do you want to trade against it or with it? Then the next step would be to look for an opportunity. Is there some wick that could be of interest to trade? Is there some divergence that could be interesting for a reversal trader? Is there a trend line break, a trend line bounce? These are opportunities that one could think of, moving average crossover, whatever. Well, that could be an opportunity. So those are things that you might think of. Filters is, could there be anything from news to basically tops and bottoms maybe close by or divergence in play. Triggers is something that then makes a trader more interested in really trading it. For instance, if price is at the trend line but then breaks the nearest candle low, that could be the trigger. That might not be the entry though, because the entry could be, for instance, a pullback or a retracement of the candle, for instance, or the break of a lower high, the break of a fractal. Those can be used as entry methods. As always, let's take a quick look what's going on in the Forex calendar. We have German Business Climate Index and the Bank of England governor speaking, which makes it a bit troublesome to trade within the next 1 hour 40 minutes. After that, we have some relatively quietness with only lighter news, and then we have just the USD new home sales. Otherwise, this entire week, just a couple of red tagged events there spread throughout the week, but nothing like an NFP or any interest rate as far as I have noticed. So just a couple of these red tagged events, otherwise just lighter news throughout the week. Nothing spectacular big though, like big. Alrighty. So the euro dollar is making a bit of a bounce. That is something that my wave analysis was a bit expecting. So that doesn't come like a surprise to me. When I was doing the wave analysis this morning, saw this triangle. Now I don't want to bore you necessarily with waves, but give me 1 second to show you just what I was looking at this morning. If the website will be moving along here, 1 second. Okay, I'll do that a bit later because it's a bit slow. My computer at the moment somehow, I don't know why. All right. Anyhow, it is breaking to the up. You can see that price is trying to fight itself out of this triangle to the upside. We already talked about the fact that that could happen because price didn't break this bottom here. So if it doesn't break this bottom, what does it often do? It starts challenging the opposite side, doesn't it? Because there's no one selling right here at the bottom. You pick up some buyers and slowly you get an upside, down. Buyers step in again because why? Because price is close to this bottom. So buyers step in, right in here, push the price higher. Buyers step in, price push higher. Buyers step in, pushes the price higher. So this is what you get when you get higher highs and higher lows, is that buyers are stepping in close to the support, also close to the resistance, but in this case you're getting higher highs and higher lows, so it's a build of basically the start of some kind of channel like this maybe. And well, that doesn't come as a surprise, as we know, because it already made a fall of 500 pips, so some correction of that 500 pips occurs often, let me say it this way, in the Forex market, right? So this does not surprise us. When you look at a fall like that, you know that a correction is possible, especially if there's divergence between these bottoms on a 4-hour chart. So some kind of upside correction is in the making. So how far could it go? That's, of course, the next question, but you can see slowly but surely it takes very long to build, but we are getting that upside, and again a breakout to the upside. So with that said, let's zoom into lower time frames to see what could happen before we get a bit of interest in today's upside. Either you traded maybe this break. I personally don't trade it that early normally, this euro dollar, but that could have been one way of doing it. Or if we zoom into the lower time frames, what remains still left, of course, is a pullback and continue. That's something that's probably a bit more interesting because of the fact that we have news events coming, and it's still very early in the day anyhow. So that's something we can still wait for this euro dollar. It looks like we have good space to the upside. The ATR is all the way at the H5. So all we need to see is price hit the R1, for instance, the daily R1 pullback, wait for some bounce here at the red halfway mark of the ATR or back to the daily pivot. Probably will not get that low, I think, but if it does, that would be great. Anywhere above 136 here, somewhere like that, 136.04, could then be the bouncing spot potentially. But I would wait for a candlestick pattern here. I wouldn't jump in along immediately when the price hits it for the first time. Wait for some price action confirmation. Let a few candles linger there so that you know the market is not falling as a rock. So you know that price is pausing, absorbing. That could be then the bouncing spot for upside continuation. This is what I wanted to show you. Right there. Euro dollar 1 hour chart. That break to the upside. Because it looks like a wave 1, 2, and 2. And this could be a wave 3. So we don't know for sure. No one ever knows for sure. That's really not the point of any strategy or any tool or indicator. We can never predict the future of 100%, nor probably close to 100. But the point is just to get a understanding of what the market can do, might do, understand its structure, and then if you know it's a 1, 2, 1, 2, or let me say it this way, if you have a chance it could be 1, 2, 1, 2, then this upside could be very impulsive. But that remains to be seen. It doesn't have to be wave 3. So, but there's a decent opportunity, let me say it this way, if this purple line is broken, that the upside trade could be interesting, at least, to say the least. Other than that, this is the daily chart. You see slow upside, big wicks yesterday at the bottom. That's about it. Nothing else to add besides that. If you have questions, let me know. Otherwise, let's take a look at the pound dollar. Pound remains in a strong uptrend here. We do have, if you look at the pound dollar, we do have still no divergence between these tops. If you look at the 4-hour chart at least, if you compare this top to this top here, there's no divergence. It's converging. There is divergence on the hourly chart, if you're wondering. Yes, that is true. There's divergence between this top and this top. But that's not actually official divergence on the 4-hour chart. So what that means is the hourly might see some pullback, but the 4-hour is still showing strength. And if the 4-hour is still showing strength, there's a good chance we'll see one more break of the top and one more break to the upside. If not, potentially 2 more breaks. But a conservative approach would say at least one more top break. If you look at the 4-hour chart, that's what the 4-hour chart is communicating, at least to me. So in that regard, we could put a fib from this bottom to this top because this is one move so far. And we see the price is actually, missed the 23.6 fib just by a tad actually, by about 13 pips. So maybe it'll still hit that level or the 38.2 fib. These are both bouncing spots for upside. At the 23.6, we have a weekly pivot and a daily S1, so that could be already enough confluence to push this into higher atmosphere. And otherwise, last week, by the way, we talked about this bull flag and the push higher from the 38.2 fib. So that was pretty accurate. I think that was on Thursday, but I'm not sure. Let me take a look. That was Wednesday. Okay. Never mind. Then in that case, that's something we probably already discussed. But anyhow, it was a good bounce here. We talked about it, the bull flag for continuation. Many traders were short here, apparently, I've been told. So you can see how dangerous it is just to short only based on support and resistance. I'm not saying support and resistance is of course a grand tool, but it just shows you that you have to use it as a confluence tool. If you only use it, then sometimes it's just not enough to read the market. Obviously, we knew this was a big impulse, and if it starts moving this slowly to the downside, then there's a big chance it is a bull flag, which it turned out to be. So, shorting doesn't necessarily mean it's a loss. Some traders could have taken a break even, but you can see that many probably did take a loss because they didn't see this as a bull flag and got taken out. Now, there's nothing wrong with the loss, but it just does help to see the market, in the lens of using these tools, like, for instance, chart patterns and impulses and corrections. So that's always good. You can see they're very useful. So that is not divergence on the 4-hour chart. There is divergence between these tops, but it's not proper divergence on the 4-hour, because proper divergence only occurs when the AO goes back to the zero line. So we can measure these tops, this top and these top, because the price has gone back to the zero line in between those tops. But we couldn't do it between this top and this top, because the AO wasn't in between hasn't gone back to the zero line in between those tops. Which means that this move up was actually one move. It's one swing. And it's not a separate swing, although this looks like a pretty big correction. So that's why this is stumbling back to the zero line. When it hits the zero line, there's a decent chance that this will break this top. So that's why any dips are still good for rallies, potentially, in my opinion. We are having some daily struggle here, but it could happen maybe tomorrow. Not sure about today necessarily. Let's take a look at this. Yeah, it's difficult to tell. At the moment, based on the 4-hour, I would say it could be today, it could be tomorrow, it could be even Thursday. I would say we will just need a break of this H3 and the trend line here to have a bit more idea that the upside is likely. Yeah, well, that's the only way, I think. Otherwise, we really don't have any idea whether the right now would be the break, or we'll get it later, later today, later tomorrow. So I think the only way to wait to be more sure is indeed wait for the breakout. When you get the breakout confirmation, then there's a decent chance of follow through to the upside. Until then, this price could stay between those orange lines for longer than we would like to see. Igor is adding, by the way, that the rally was after FOMC. Yeah, that's possible. FOMC was already a while back ago. I'm not sure. Or was last Wednesday, I think. last Wednesday. Yeah. Yeah, indeed. Yeah, those sometimes, of course, technicals and fundamentals nicely fit together. Um, so those things definitely occur when looking at the charts. And here we have audio USD. Falling pretty fast, and I was a bit worried about that this morning. When looking at this, this looked like a pretty impulsive move down and a very slow move up. Why do I say worried? Because basically I was contemplating about a long, but I skipped it because of the fact that, well, as I said, this was looking too corrective. So I was worried about the downside. So and why was I looking for longs? Because it looked, it is an uptrend, so that's one thing. Plus, we had a pretty nice correction like this. So I thought it could be a good pullback for more upside, but I skipped it because of the faster downside and slower upside. That looks like an impulse down, correction up. So that seems to be proving true, and for those that like to trade reversals, maybe that would have been a signal for you to look for shorts, but I like to focus on it with the trend. For the moment though, if you look at the 15-minute chart, it could be a bearish day maybe for the AUD USD. Let's see, one way of doing that is waiting for a pullback to and for a bounce off the daily pivot, for instance, down to the weekly. That's the only thing that's a bit annoying. The space here on the Aussie is not that much, with the pivots, price being in between the pivots at the moment. Let me refresh this template 1 second. Alrighty. So anyhow, daily chart is showing a bit of a struggle because we do have a top right in here. And we certainly had some good upside momentum here, a pullback and some follow through, but you can see price is just struggling with this the top right in here between 94.38 and 94.62. And we did have an engulfing twin yesterday, plus engulfing here. So as long as price is still above this bottom, in fact, things are still looking bullish, and this could be just a pullback for upside. So anything above 93.75 could be a bouncing spot, I would say. So let's take a look at the lower time frame now with that in mind. So there could be maybe a counter trend break, but as I said, if the more price gets closer to that green line, the higher likelihood there is of a bounce. So I would be cautious of that downside. There is momentum to the downside at the moment, but the space really seems limited. And if you look at it from a bigger perspective, then in fact, it almost would seem more logical to let price get there and look for the bounce rather than trade it to the weekly pivot. Yeah, so if anything, I would think that longs actually from the weekly pivot and L4 are more interesting than looking for shorts to that level. Let's see, Eve is saying that Dennett said the same yesterday, buy around 93.70. So that's good. That's another confluence. So that helps support taking a trade maybe if price gets there. We have also an ATR at 93.76. So all of that gives nice confluence at that level. So let's see if price does indeed get there. But if it does, then that confluence of these indicators is good, and Nanette and I are apparently seeing the same. So that's also good. Thanks for that comment, Eve. So let's see how that goes. We can have upside, still some struggle, but if we get it at a discount, Even trading it up to, for instance, 94.50 is already a decent amount, in fact. And maybe, who knows, maybe price does break to higher levels. Eventually, 95.20 could be a bigger bouncing spot because that's a big fib. There are also some weekly R2s and monthly R2s at that level, so that could be maybe a bigger stalling spot, around 95. Kiwis, the same as the Aussie, although it's falling less hard at the moment. It too had a pretty strong impulse, followed by maybe a weaker upside. It is definitely still in a 4-hour uptrend. Moving averages nicely pointed to the upside, nicely aligned. Same story, I guess, as the audio is but I'm not sure if price can get that low to the weekly pivot. If it would, then that could be bouncing spot 2 or just L3. Anywhere here, it could be still bouncing spots. Take a look at the daily. Yesterday was a Harami, bullish Harami. Well, considering that the fact that yesterday's low was here, it would have to break yesterday's low to get to the weekly pivot. So that doesn't seem so likely. So, or it's possible, but not something we have to necessarily plan on. I think that along anywhere above this 87, 87.02, 87, pretty close by to where current price is. It's a bit of a risky trade in the sense that price is moving down, but it could be a bouncing spot. Yesterday's low, L3. Now the stop loss could be below this bottom, and today's expected ATR low at 86.70, for instance, 86.73 maybe. That should provide, there's enough support layers below it, like the weekly pivot point and the daily S1 and the expected low, for if price doesn't stop here and does move a bit lower to survive that pullback. Now there's not a ton of space to the upside. The ATR is only at 87.45, but anywhere between 87.45 and 87.60, 87.70 could be the target for anywhere between 50 and 70 pips. That would not seem that bad. Of course, if you wait a bit, maybe longer, and let's say have a bit more patience maybe to wait for a better price and get it at 86.90, for instance, if it were to break yesterday's low, obviously then the risk is smaller and the potential reward is bigger. So that always helps. Every pip that we can subtract from our stop loss and add to our TP obviously changes that R to R balance quickly. So that depends. But as I said, I don't know how likely it is that we break yesterday's low. So I don't think that in this case, planning on that, it's possible, but maybe not the biggest chance. Well, let's see how it goes. The other way, of course, doing it is waiting for some confirmation. Confirmation is never, ever a bad idea. Just before you get the confirmation of price hitting this level and bouncing, the price is a bit higher again. But then again, if you get the confirmation, you can use a tighter stop loss because one could use the low of the candle instead of putting the stop loss here. So it really doesn't matter regarding R2R maybe that much. That would be always a way of looking for confirmation when price hits this level, like a wick or engulfing twins at the 87 level. The only thing I don't like about it is this fact that it made an impulse correction like this, but doesn't necessarily have to turn out into a wave like this. Could, doesn't have to. What else is going on? Let's talk about, let's take a look at the dollar yen maybe. Dollar yen. Let me switch this template for a second. Hang on. Very much stuck in a wedge. That also something I was showing in the wave analysis today was the fact that prices really stuck in between a pretty big wedge like this, and it found indeed the bouncing spot with tweeted bottoms earlier this morning at that bottom of the triangle. In fact, so sometimes these chart patterns do nicely. Not that the trade is up that much, but it was a small risk because if one puts the stop loss just below this bottom, that's really literally, I don't know, it's looks like 7 or 8, 10 pips max. So that is, of course, interesting with those ranges and triangles that the stop loss could be relatively tight, and a 15, 20 pip move could already be providing close to 2-to-1. In this case, price is now moving back to resistances, moving back up to weekly pivots, daily pivot, monthly pivot. It's right in between them. Doesn't look that interesting, but if price were to break out of the H3, above H3 I should say, and above the weekly pivot point, maybe there's still some breakup potential left. Preferably wait for break, pull back, and go. Could be something to wait for here on the dollar yen. In its entirety, I don't like the breakout that much because moving averages are that flat that breakouts are more risky in such an environment. Dollar CAD fell like a stone on, what was that, 20th, Friday? Probably was a CAD news event, but not 100% sure. But anyhow, it is right at L3. Hasn't broken it yet. So that looks like a good potential to the downside. Can't see it too well because I have to zoom in a bit how do you say it, lower or shorter to see it a bit better, because this fall is totally taking the entire balance out of the chart, because we're seeing about 110 pip fall, so we can hardly see what's going on at the moment. But if we zoom in, you can see that price has bearish moving averages. It's just that it's bouncing at the moment off of that L3 again. So if price were to break below this low and the L3, close with a bearish candle close that is near the low, for instance, indicating a strong close, something like this. This could be a strong closed candle, right? Or something like this, even better. Then that could be the breakout to the downside with targets at the S2 and L5, which is about 30 pips here. That would be a good breakout to the downside. Dollar CAD looks like a good breakout. It has bearish moving averages. It has pivot points all above it. So that means it's in a bearish environment. Price is below the average of all those pivots as well. It's below the moving averages. So it doesn't have divergence between the hourly bottoms. The AO is pretty close to the zero line, not entirely there, but sometimes it doesn't get there exactly. Here we can see it was missed by a very little difference there, so sometimes it can happen. So there are good things to look for in potential downside. Will it happen? No idea. But if it does push below that L3, it does look like it's worth the risk, in my opinion at least. Only time will tell if it was a winner or not, but we just don't know beforehand. Price could go back to pivots. Yeah, that's like a reversal or a mean, back to the mean trade idea. And those things do happen. But they tend to happen when there's divergence. Price does accelerate sometimes away from the average, as we know, in momentums and trends. So the art is to, of course, to know when that happens and when does it go back to the mean. And it's actually nothing wrong with having a one trade strategy that is capitalizing on setups that are going from the average and one setup that is going back to the average. In this case, because we don't have divergence, there's no clear chart pattern as well indicating a potential turnaround. I wouldn't necessarily think that this is the spot as yet that we'll see a move back to the weekly or pivot. So looking at that setup, therefore, I think a breakdown and then maybe a bounce up is more likely. One way of looking at pivots too, you could, for instance, take a look at where's the average of the monthly, weekly, and daily. So the average, where would the average be of these three? Probably somewhere around here. Then look where price is compared to that average. And basically, if it's below, it's bearish. If it's above, it's bullish. If price is above the average pivot point, it's bullish. If price is below the average pivot point, it's bearish. And what you can then do is say, okay, in that scenario, if price gets to R1 in a bearish environment, that could be also a bouncing spot for downside. If price is in a bullish environment, you can use the daily S1 as a potential bouncing spot for upside. It's not something we've discussed actually here before, but this is what you can do as well. So if price gets up to R1, that could actually be a bouncing spot for downside. So that would be this alternative. If price doesn't break below this L3, but starts to indeed move up, I wouldn't be looking for longs today in this, at least at the moment, in this bearish environment. But if it does go up, that could be another idea, is to, besides the breakout, look for R1 bounces for more downside. So once again, the way to do that is take the average of weekly, monthly, and daily. Realize where price is compared to that average. And if it's bearish, look for bounces at R1. If it's bullish, look for bounces at S1 for upside. We're seeing bullish bounces as well against the Aussie on the Euro and Pound. The Pound odd is quite funny because it's right in between these pivots, but it's approaching the weekly pivot, in fact, which could definitely still be a bearish sentiment there. So I would be cautious that this is pretty interesting to me, this Pound odd, because it's approaching a level that I would think could be interesting for shorts. Now, really, we have no idea if that will be true or not, but if I look at it from multiple angles, it does have that. Oh, sorry, this is annoying. One second. Let me put on a new template. Good. If you look at it from different angles, it does look interesting. Now, what are those angles? The thing I don't like about it is this impulse, in fact, but okay. One thing I do like about it is that there is clearly resistance here. We have a weekly pivot point, daily R1 close by. And the other thing I like about it is the fact that if you put a fib on this upside here, price is very close to the target, the minus 618 target. That itself is often a turning spot too. So you have a pretty interesting confluence of resistance on the left a weekly pivot point, and a minus 618 target. Plus, we're not all too far from the ATR expected high. So I would be interested in some price action signal right here, in fact, on the hourly, for instance, or 15-minute, but any rejection in this area could be very interesting. The same holds true for the euro-odd. If you put a fib on this downside, this upside, sorry, you can see price is also pretty close to that minus 618 target, to the ATR expected high. There's also clear resistance here, close by. No divergence between these bottoms, but a failure to break this bottom. That's the only disadvantage of that. Yeah, that's the only disadvantage, because this is a potential weakness here because we didn't break this bottom. So that's the only thing really not so good for the short side of things, because if it takes that long to break a bottom like this, we have daily divergence. We might not have 4-hour divergence, but we actually are building on daily divergence between these bottoms. And that could be a substantial problem for continuation of downside, even though all the moving averages are bearish. Because we could be in an environment that is looking at a reversal to the mean potential. So then things are looking a bit more shaky, and yeah, that's not that easy on this euro-odd. In fact, that particular part, the daily one. However, if you look at the resistance here, it's pretty thick. And we've had a three-wave up like that. So some downside seems likely, even if we would move to the upside after that. So this is still a good shorting area. Just maybe the target to the downside will need to be adjusted to more realistic out view, and not something that aims for, I don't know, 140 or something like that. That might not be that realistic in this situation. With the daily divergence in play, that might be problematic. But if one shorts the resistance here, or looks for confirmation of resistance here, which is, I think, better, then a conservative target somewhere at the daily pivot, for instance, might still do a decent job. So let me look at the pound odd again, because if there's daily divergence on the euro odd, does the pound odd have the same? Not really, because we didn't break this bottom at all. In fact, price showed weakness in the sense that it's just oscillating like this in a range sideways. So it's a bit different. In fact, it actually is looking like a correction of almost like a bear flag in a way, but let's see. So I do think pound odd and euro odd have shorting potential when we get close to resistance. It's just that the overall environment is maybe not as bearish as I thought it was, and we could see the potential of bigger corrections later on. So that's something that you might want to be careful of. In general, though, you want to use the Camarilla, having an idea where the breakout levels could be and where bounces could happen. But using candlesticks for that confirmation is always very useful, just like pivot points. Just like when using pivot points. Sorry. So other than that, the euro yen and pound yen don't look too interesting to me. Euro yen is very close to resistance, and pound yen Let's take a look. Big doji bar there. Yeah, it's really quite slowish movement, even for the pound yen, if you compare it to historical candles at least. Look at this slowdown here in the size of the candles. Well, if I look at this harami, that doesn't really look too interesting. If anything, there could be a potential reversal trade off of that. However, of course, obviously the moving average is still very bullish. So it looks like almost like an ascending wedge, and it's trying to push through that, if anything. So that's another way of looking at it. I don't know. Seems to be a bit of a mix. Bearish price action, bullish moving averages, bullish chart patterns. No, not a big fan of it. Let's see if there's anything else going on. Well, price is back at the daily pivot here. There's no divergence on the hourly. There is a bit of potential divergence on the 4-hour. Well, we don't know for sure yet because we don't know if this bottom is finished. But it's close to getting finished because we can see already it's rounding here. So the next candle close would potentially confirm that, in fact, already. So yeah, there is that potential 4-hour divergence there. So that is a bit concerning. Otherwise, everything looks pretty bearish. And breakout to the downside here would seem logical, although if you look at the space, it seems pretty limited. Yeah, that doesn't seem like a lot, but still 30 pips potentially. How about this Euro New Zealand? Ah, sorry. Too flat for me, in my opinion. Too much of a range at the moment. I would be cautious of that. Dollar Swissy. Yeah, also quite choppy, but the bearishness might be interesting here because we do have bearish moving averages. Price is below the weekly and daily, so it doesn't have that support in the way. This could be a breakout to the downside. Like the euro dollar could be a break to the upside. The dollar Swissy could be breakout to the downside here. So that doesn't look too bad, in fact. Yeah, the dollar Swissy looks pretty interesting. Yeah, we can take a look at gold. 1 second. Well, I would never short against an impulse like that until we got divergence, and especially on gold. So any pair, in fact. So we don't have divergence between these tops. So to me, this is looking potentially for more continuation. if it does, price normally wouldn't break below this top. That's one thing. If that happens, something different is going on. And we can put a fib as well on from swing low to swing top to swing high. And price could stop at the 23.6 like it did here. It could also bounce from the 38.2 fib or from the 50. Those are all bouncing spots in my opinion. But it shouldn't break below the 61.8. Otherwise, it's not looking bullish. The most likely fib would probably be the 38.2 fib and the weekly pivot here at 129.80. 129.8, sorry. But it doesn't have to get that low, however, because we see daily pivots already that are above the weekly. So that's the question if it will get that deep. But there's also a chance we could actually stay in a triangle like this or make a flag as well and then move up. But if I look at this, this is looking bullish, and especially also the AO. So strong daily candle as well. So the only thing I think we can anticipate is a retracement of the daily candle and upside. That's what I would be looking for. So that is it. Otherwise, because this is actually looking more like a correction with a strong bounce. And this had more pace to it than the downside. So this is actually in total looking more like a correction like that, and price didn't stop at the fib, okay? But anyhow, it did stop at this minus 272 target of the first wave, first leg down. This leg down, it hit the target. So this is now looking more bullish. Bullish moving averages as well. 15 is flat. If we calculate where the average pivot would be probably around here. So price is above it. That means that a potential bouncing spot doesn't even have to be that low. It could even actually be at the S1. So that could be here actually. Potentially. Yeah, so to me it looks bullish, either on the dip and confirmation or either upon the break of these tops. Anyone else have a favorite in mind? To me, the dollar Swiss, euro dollar look the most interesting at the moment, and the Kiwi and dollar CAD. Anyone else have a favorite in mind? Also, euro odd potentially, but that's more like a bounce trade to the downside. I don't think there is a lot potential there. Odd USD up potentially. So yeah, there's some potential today, I would think. Let's see how it shapes up. But I think the euro dollar, New Zealand dollar, odd USD could be good ones to keep an eye on. Dollar CAD as well. Euro CAD, dollar Swiss, euro odd, pound odd. Raj is saying Kiwi is looking good. Oh wait, it hit the 87.03 level indeed, as we were discussing. So we can take a look and see if there's some price action signal on the hourly or 15-minute. Maybe some of you already traded the 87.04 level that we were discussing. I didn't, as you can see, but so we can keep an eye on this Kiwi. So once again, what I would be looking for is a euro dollar break to the upside after, or actually pullback after it broke. Same for the dollar Swissy, but then to the opposite side, to the downside. The Kiwi looking for a bounce here off of support. Well, let me go through all of them quickly. It's anyhow still early, so euro dollar, I'll be looking for a potential bounce off of the daily, or break above H3. AUD USD, looking more for a bounce off of the support level. Kiwi looking the same, bounce off support level, but right now not lower like on the AUD USD. AUD USD is looking for lower levels. Dollar CAD, either a bounce off R1 to the downside or a break below, which is actually doing right now. So I will be looking 8 minutes from now to see how this candle closes. If the candle closes close to the low, that could indicate that the bears, the people, the shorts, are in control. That's what I want to see. Other thing could be the rejection of pound odd and euro odd, which it's doing right now. It's actually showing wicks. Well, we still have 23 minutes to go, but and they do have news events, but yeah. Price action, technical speaking, it would be pin bar at the moment, if it stays like this at least. What else? Euro CAD, potential downside break. Yeah, that's it. That's the 2, 4, 6, 8 that seemed the most interesting. So let's keep an eye. Euro CAD, downside break, euro odd, and pound odd rejection wick. Dollar CAD break below. Kiwi bounce. AUD USD bounce. Oh, even pound dollar break to the upside, in fact. And the euro bounce or break. So maybe any questions would be a good appropriate time, because these are the currency pairs we normally look at. So let me know if you have any questions or any follow-up comments, or otherwise I don't want to hold you, necessarily hold you here without any reason. Of course, obviously time is money, so let me know if you have certain things. Alrighty. Well, we got a question here. What is the system? Well, basically, the Camarilla you can use for identifying breakout and range levels. So one thing that I look for is, for instance, if price is having momentum and approaching the H3, you could wait for the breakout of that level. For instance, that could be a breakout trade. You could also say, okay, if price pushes above H3 and gets to H4, for instance, or is a bit above H4, anywhere, let's say halfway H4 and H5 and H3, if it breaks above there and pulls back, it could be a good pullback area for one more upside. That's one thing you can use. So I use the moving averages to have an idea about momentum, but then use these levels to have an idea how far price is in the development of its trade. And you can use daily pivots as well and the ATR to have an idea if a breakout or pullback have good space. Breakout, of course, the closer we get to these levels, the less sense it makes to take a breakout, and the more sense it has to wait for a pullback, because otherwise we don't have the expected R2R there. If now there's still decent space, but if price is closer, then the space is getting smaller and it's better to wait for a pullback. especially if there's no divergence, the pullback like that would do a decent job, normally speaking. Also, things I look for are, for instance, price action at pivot points. For instance, like in the case of the dollar CAD, we could wait for instance, the bouncing spot at the R1. Price is not getting there, but could be worth waiting for. Or, for instance, like the euro and pound odd, that not really using moving averages at all in this case, because the moving averages are actually kind of like a mix. They're bullish, but they're not aligned. So in this case, we could say, okay, price is not trending, but it's making some kind of impulsive correction probably. The moving averages are not really of value, but price is getting to a level where there's a lot of pivots and confluence and resistance, and we could wait for price action, for instance, price action candlestick pattern, to have an idea of a bounce at those levels. So this would be more capitalizing, not so much on moving averages, but on price action at pivots. So one idea is more based on trending modes, where you use moving averages to take trending breakout continuations. The other one would be more looking at price action at candlestick patterns. Candlestick patterns at pivot points. So yeah, if you count this analysis of the Holland football shares, yeah, well, of course I'm laughing and smiling because obviously the results were good for a Dutch supporter like myself yesterday, in the sense that at least the outcome was good. Maybe the match wasn't all too wonderful, at least especially the first half for the Dutch, but the second half maybe was a bit better. But the result was good, and they did have some good chances, especially in the second half, I would say. So I think that if you're a Dutch football fan, that you cannot be disappointed with 9 points and 10 goals. That's for sure. So yeah, that's very exciting. So very happy about that. Looks like an uptrend indeed for the Dutch. But who knows where the resistance is, of course. We'll find out soon enough. Hopefully there is no resistance, at least for the Dutch. Of course, they're hoping that. If you count this as saying Brazil, yeah, that's a very logical one indeed. Germany too is going to be very tough. I'm sure Argentina will be very tough too. But some of the teams that seemed like beforehand candidates didn't make it, like England, Spain indeed. Italy is not doing that great of a job, although they're still in the tournament, obviously. We had some upsets, right? Interesting. Like Costa Rica, already, I think, secure of the second round, aren't they? That was a difficult group with England, Italy, Uruguay. Wow. Yeah, France is playing good. They're also beating expectations, I would say, roughly. I mean, from what I understand of it. It's going to be interesting. You got to love a tournament like that. It only happens once in 4 years, so it's always spectacle. Especially this one. I mean, there are tons of goals, and I would say pretty nice football. It's not like yesterday's match is maybe not the best example, nor actually, for instance, 2 days ago there was also Belgium against Russia was also nothing special. But in general, the game seemed to be pretty good, plus a lot of goals. So it's the highest scoring World Cup ever. So that's, yeah, I'm pretty happy with that. It's fun to watch. Mike is saying Greece. Yeah, Greece has 1 point, right? Don't you? I At this point, let me check. Let's see, Raj is asking, possible to send the template indicators. The template is somehow I'm never able to find the template or not able to add that template. I don't know why. It's not that I don't want to, but it's just, the indicators is no problem. Just send me an email. I've done so before, so no problem. Just send me an email. I'm writing it right now. Let me take a look. Greece, yeah, 1 point indeed. 1 point. Japan, 1 point. Ivory Coast, 3. Colombia, 6. So Colombia is through. And let's take a look what the lineup is today. Greece is playing against Ivory Coast. And Japan against Colombia. So if you beat Ivory Coast, then let's go back to the group. You would be ahead of Ivory, and then it depends what Japan does. If Japan draws, you would be indeed second. So that's pretty. If you win, then it seems pretty decent chance of that happening indeed. Unless Japan were to beat Colombia, which I don't see happening too fast, but in that case it could be a bit more difficult. Yeah, if you win or Japan draws as well. Yeah. Yeah, it's possible. At least you have it in your own hand. Well, no, actually not. But I mean, it seems not too likely Japan will beat Colombia. So, but you never know. Yeah, interesting. What else do we have tonight? Let's take a look. Oh yeah, we have Costa Rica against England. Italy, Uruguay, of course, is D match. Yeah. So Uruguay has to win. I believe Italy can hang in there with the draw. Yeah, Belgium made it indeed. Belgium was already through. They have 6 points. They beat Russia 1-0. Goal, I think, like 2 minutes before the end. Yeah, so it's gonna every day is now going to be very exciting with this the end of the group now. So that's good. So I don't want to bore the others. Maybe they're not too interested. They probably already left in the meantime. But the price obeys to which set of more? The Fibonacci pivots or trend lines? I think that price obeys all of them. In fact, I wouldn't dare to say which one it obeys more. I think that pivots have an advantage that you don't have to draw them yourself. I do see sometimes fibs that maybe don't make all too much sense. So in that regard, pivots are just there where they are. Or of course, you want to have pivots that are calculated accurately, but otherwise it's more automatic than drawing Fibonacci manually. That's an advantage. But one thing what could be done is use confluence of these three things or whatever you use. That's always good. By using confluence, you get more supportive elements to trade. That's what I like about, for instance, this weekly pivot and the minus 618 close to each other. There are two reasons that price could have trouble. Or here we have the minus 618 daily R1 and the ATR expected high with a top close by. Well, that's another reason why price could be struggling. 4 reasons why price could be struggling there. So that's the advantage of basically waiting for some confluence. The Kiwi didn't show any particular candlestick pattern on the 15, so still waiting. Dollar CAD didn't have a close near the low. Do you see that? So I'm still waiting. That's a wick. That doesn't show a thorough breakout, at least a breakout that I'm looking for. Let me say it this way. So no, that was a test, but didn't get followed through. So we could see again some retracement. Maybe the next go through it will be more reliable. Pound on the euro, it's still waiting for the candle close. If it's a wick like that, it could be worth it, but maybe the candle break of the candle low could be one way of doing it, depending on how bearish this candle is. If it still closes bullish, I might still wait for one more push up to hit this R1 exactly. If it closes bearish, then it could be worth taking upon the retracement, or take it upon the retracement but put the stop loss above here. That's another way of doing it. Let's see. Yeah, no problem. Any questions are more than welcome. What is the indicator above stochastics? At the end of my screen, well, above it is the AO. That's the asymptotic oscillator. You can find that by going to Insert Indicators and then go to Bill Williams. And then it will say asymptotic oscillator. Also, is daily, monthly, weekly pivot point part of Camarilla, or is it another indicator? It is another indicator. Yeah. You would have, on the Camarilla, you would have normal daily levels, but you wouldn't see the weekly or monthly pivot. So I like to see the three main pivots just to see where, sometimes where the average is, see what direction price is heading towards. Is price below the average or not? Also interesting just to see where the main pivots are, just to have an interesting idea of confluence. For instance, we, in case of the pound odd, know that price is close to that weekly, which gives us an idea that this minus 618 target, is another confluence of that level. So it's also not, a pretty interesting level to have on the chart. I would say maybe monthly happens less often, but especially the weekly, I would think I like to look at, because it just gives an idea where the weekly gravity point is. In this case, price is retracing from a move down, retracing back to the weekly. So in this case, obviously, it would be more of a resistance. It would, if price were to have been above it and have been moving back towards it, then it could have been more potential support, right? But that's probably logical. But in this case, it's acting as could act as a potential resistance. So normally I don't trade pending orders there, by the way. I would wait for price to confirm that it stops at that level. But this seems to be good because there's two levels there. There's two reasons, maybe even three reasons why price could stop there. So if we get price action confirmation for that region, we know why. No, it's not. It's a manual. It's a custom indicator. You wouldn't find it on the normal list. Let's see, sir, the video recording placed for the Supreme Edition at the video archives belongs to mobile trading for Android or so. Will you please arrange to replace the saying with the correct one? The video recording placed for the Supreme Edition. Okay, thank you, Radish Hati, for that heads up. I will, let's see, try to get that sorted. Indeed. Thanks for that for the message. That's good to know. Raj is asking how long have I been trading this system? Well, this is a particular, the candlesticks at pivot points not too long. The moving averages I've traded for as long as I can remember. So that the one is, the moving averages is something with trend lines and fibs I've been using for as long as been almost as long as I've been trading. The pivot point and moving at the candlesticks at pivot points is something new indeed for me. It's a new way of trying to find reaction points for bouncing spots instead of looking for breakouts or pullbacks. It's more of a bounce reaction system back to the mean or bouncing off the mean than trading from the mean, away from the mean. So basically it's looking for confluence and trading candlesticks off of that. So it's nothing too fancy. All right, folks. Well, thank you so much for joining. We'll be back tomorrow with looking at strategy. There are 3 strategies in particular we'll be looking at, but maybe we will look at something new. But in any case, we'll take a look at those 3. That's same time tomorrow, Wednesday though, at 7:45 a.m. UK time. Great. Good to hear that, Raj. Thank you so much, and wish everyone a good day. Talk to you soon.